Hello, everyone. Good morning, good afternoon, and good evening to everyone joining us across the globe. Um, Thank you so much for making the time to come for the PayPal Stable Club Summer Series Session 2, where we focus on stablecoins in motion and look at real world use cases that are driving momentum. This has been a really, really interesting time to be a part of the crypto space, and I think everyone here on the call will agree that it's been so exciting. And today itself, we are in the middle of what the House of Reps is calling the Crypto Week. So it's definitely a really, really exciting time to be talking about stablecoins. We are witnessing a very fundamental shift in the world of finance. One that's very innovative, and it's reshaping how businesses and individuals transfer and store value. Stablecoins are no longer just crypto curiosity. Today, they are becoming a very vital channel for value transfer and storage, and a way to increase efficiencies across the traditional financial ecosystem. If there was ever a time to learn more about stablecoins, this is the right one. Many people are referring to 2025 as the year of stablecoins, and I think that's for good reason. We have seen unprecedented growth in even this, like the first half of 2025 alone, with stablecoin volumes trading by over 150%, which and reaching new records, and the global stablecoin market supply rising to over $250 billion. Mainstream adoption has never been this high with these kinds of volumes, which are even far greater than Bitcoin itself, if I may say. Major companies from payment giants like PayPal to tech leaders like Google are rapidly thinking more and more about stablecoins and integrating them into their infrastructure. And we are so excited to be a part of that journey. So, as stablecoins process trillions in annual volume and account for a growing share of global financial flows, their influence continues to expand into more real world use cases. And that's what we're here to talk about today. So, we are very honored to have with us today two trailblazers at the heart of this amazing transformation that our financial ecosystem is going through. First, we have Richard Whitman, who is the global head of Web3 strategy at Google. Richard's leadership has helped Google execute its first ever stablecoin transaction that we were so excited to be a part of. And he drives broader stablecoin adoption and Web3 initiatives within one of the world's largest tech companies at Google. He himself is an expert in crypto policy and technology and a leading advocate for blockchain adoption and enterprise context. Next, we have Steve Everett from PayPal, who leads market development for PayPal's digital currencies business. Steve is the driving force behind our stablecoin PYUSD, and he has overseen groundbreaking use cases from instant B2B settlements to cross-border payments. His work in making digital currency a part of everyday business reality for millions of users and enterprises is what's bringing us here today. So, with that, I'm so excited to explore how both of you and your organizations are helping us build for this transformation and build and grow stablecoins even further. So, without further ado, I'd love to get your thoughts in on how you feel about being a part of this journey and being a part of this year that we're calling the Year of Stablecoins.
I'll kick off and I'll just say for the record that we didn't pay Mehek to give us such really warm introductions. Um, but I think your intro there was spot on, right? When it comes to stable coins and kind of all the infrastructure that's happening, and that's really what I think this is. This is less of an asset specific kind of use case, and it's more of a revolution around how we think about payments generally, stablecoins being part of that. And that's what's really exciting about it, because I think typically for payments companies who think about forms of payment, that can be almost a boring discussion, because there isn't necessarily anything revolutionary in the forms of payment that we may be used to, right? There's nothing revolutionary between Visa or MasterCard, or any of those others. But when you think about what stablecoins enable in terms of basically borderless settlement, right, global 24/7 instant payment, and the ability to self-custody, I think that's actually something that's really quite novel. and it unlocks a whole lot of exciting things, across any use case. And so that's one of the reasons why our team is spending a lot of time on it. Not just because it's interesting for developers, which of course is a big focus for us. We want people to be building with this new tech, but also because of what it means for consumer payments and B2B payments at large. And I think it's pretty hard to ignore that, given what we've seen in just the last couple of months in terms of traction and excitement here.
Yeah, indeed. Thanks, Rich. And again, echo the sentiment towards Mehek. And want to thank Rich and the entire Google team as well. We've had a long-standing partnership and relationship, and couldn't ask for better collaborators as well as thought leaders across the space. And it's always an interesting and fun place to play when you're looking at innovation and not just driving technology for technology's sake, but really addressing some real world use cases. And that's what really drew myself personally into the space. And when PayPal started to form a formal business unit a little over 5.5 years ago, our guiding light was, how do we leverage decentralized blockchain infrastructure, right, to open the world of, from our angle, payments and commerce. How do we address the underserved, unbanked, and emerging markets, and connecting them with merchants across the globe, whether that's through the PayPal ecosystem, right? That's 400 million consumers and a little over 30 million merchants, but outside of the PayPal ecosystem as well. And how we think about going to market is not just within our own product silos, it is through strategic partnerships with large global platforms like Google, but also through our relationships with the overall developer community. And that's one thing that we hope through forums like this, we can help establish and accelerate some of the relationships and help give a little bit better understanding of what we're looking towards, how we're thinking about building our own products, and areas that we want to continue to encourage and invest in the development outside of our ecosystem as well.
I love that, Steve. And while you think about encouraging and leveraging the ecosystem outside of like our own organizations, it's really interesting to just learn more and understand more about how you think around partnership strategies to leverage stablecoins as a superior channel for value transfer. With the nature of our industry being so decentralized, one thing that we know for sure is that we cannot do this alone, and which is why our two teams have also come together to really push and make this a success. So I'd love to learn more about how you think around just beyond efficiency, but how stable coins are fundamentally changing how value transfers around the world, making every transaction faster, cheaper, and more accessible across borders. So would love to get your thoughts in around how you want to leverage these different value propositions that blockchain and decentralized technology brings to us through stablecoins, and apply that to our more traditional Web 2 organizations.
Yeah, that's a really good point, Mehak. And I think you can split the world lots of different ways, right? Emerging markets versus developed, Web 2 versus Web 3. Uh, and I think the the exciting part about where we are today is the transition or the bridging across developed, emerging, Web 2, Web 3, uh, online to on chain, if you will. And the impact of stable coins, right? Being able to take advantage of the real time, decentralized nature of blockchain infrastructure, right? Across different protocols. And, there are strengths, pros and cons across the different protocols as well. But at the end of the day, it's enabling that real time transmission of not just value, but also of data and data payload, which I think sometimes gets overlooked, as well as, and part of that gets into, you know, identity verification and a lot of other pieces that are core to legacy payments. And when you start thinking about the challenges that our legacy financial rails have today, and what they are encumbered by, uh, you remove a lot of those obstacles and have a path to move things much more real time and at a global scale with a much lower total cost of operation with stable coins and blockchain payments overall.
Yeah, just to piggyback off of that, Steve, like I think that look, because payments touches everyone in a way, right? We're so used to, we just make payments, we're on kind of autopilot. But if you stare at kind of the value chain of payments today, there's just about like roughly about 6% of all payments is sort of cut out of the transfer itself and kind of distributed across the traditional stack between intermediaries and the networks, et cetera. And what I think is really interesting about what stablecoins have done is they've really forced a recalibration of how the value of that money sort of gets from A to B. And by the way, who those incentives for moving that money go to, right? And so I see, to be clear, like I think we see a lot of opportunities for stablecoins to be crypto's killer app, not just because of the value props that we talked about, kind of to Mehek's first point, but also because if you think about the efficiencies, the lower costs, et cetera, and the decentralized nature of the ecosystem of the stack, it actually, what I hear is a lot of teams saying, well, stablecoins allow me to move this for, a lot cheaper, this value to a particular creator or to an end user. And instead of pocketing that efficiency for the organization, right, whoever it might be, they're talking about basically sharing that and increasing the amount of value that makes it to the end user. So in a world where you would typically say, hey, if you take a payout via wire, you get 95 cents on the dollar. If you do it via ACH, maybe you get 96 cents on the dollar. Visa and MasterCard, you're getting 3.6 or 96% cents on the dollar. But if you do stable coins, I can give you 99.9 cents on the dollar. Like being able to share that value with the consumer is, I think, another really interesting way in which stable coins are, again, not just making payments more efficient, but also redistributing that 6% loss, so to speak, that happens in the traditional financial space, and allowing users to get a little bit more of that while also decreasing the cost of the people who are sending the payments, right? And I think that's really something that is, I think, talked about when we think about stablecoin rewards and yield, but not necessarily thought about in the way of, well, wait, that yield could be used to give more value to the end user, to the recipient of that payment. In a world where right now I have no negotiating leverage, none of us do, with respect to sending money over the traditional payment rails, right? Those guys take their cut and you're stuck with it.
Yeah, that's a really good point. And I think a point that oftentimes gets overlooked, Rich, you can even think at a very large macro scale, right? What is an incremental 6% of global GDP really look like? Like, what are the things that enables? And then you can take a look and break it down, from a consumer perspective versus an SMB or mid-market, all the way up to your enterprise clients, and different use cases driving different efficiencies and added value props. And I think, aside from, hey, the bright shiny object and this is a cool new thing, it's really those value props and user experiences that are going to provide the stability, the sustainability, and accelerate the adoption of stablecoins across the ecosystem.
I really love how this conversation has helped us establish that the different areas where stablecoins are outperforming traditional channels, and what a large impact that could make. I'd also love to understand, and maybe Rich, you could take this one first, about how industry leaders like yourself are crafting strategies and how you think about this, that you know that there is this large impact and this large change that can be made using stable coins, but what are the ways and strategies that you think about to maximize the advantages from this? And then with that, of course, there, I'm sure there will be a bunch of challenges that might come to your mind right away. So what are those like real world barriers and challenges that you often come across?
Yeah, so it's been a 4-year journey, right? For us, as we've thought about, we'll say crypto rails as an avenue for payments, and then stable coins becoming sort of the thing that has really had its time within the last couple of years. Even though they existed in 20 and 21, they weren't widely adopted. And so, our journey really started very, very small, right? We knew that everything in cryptocurrency generally begins and ends with custody. And so the most important thing that we did was really kind of go on an educational journey. Again, we read a lot of white papers, but that will only get you so far, right? You can't read a manual about how to play shortstop. Like, you just have to field a couple ground balls. And so we went and we partnered with folks like Coinbase, established a custody relationship with them, and then started to really wrap our heads around the implications of, holding cryptocurrency, buying, selling, and understanding how, wallet infrastructure worked. And then from there, there's actually like a really great, story, which is back in 22, after we had custody, we were like, we should move right into crypto payments. And there was a lot of fanfare around this. And one of the things we realized as we moved towards that first kind of like, we'll call it jumpstart effort, was there was a whole bunch of infrastructure that was missing. Like a very, very basic perspective that we had was, crypto will take off in kind of B2C payments first, because we're seeing a lot of consumer adoption of crypto. That's where a lot of the value prop is. It's far easier to tell one retail user about the benefits as opposed to convincing a board at a Fortune 500 that's heavily regulated. And then we realized like all the B2C use cases were ones in which like risk mitigation provided by the networks via chargebacks and fraud protection and everything else, they just don't exist in crypto. Like even the concepts of a refund flow. And so we actually went back to the drawing board, and our strategy then kind of was informed by, okay, who are the people who we can have we have relationships with, who have gone on the same educational journey, can share an interesting perspective and actually help us bridge this gap. And we found that those were our partners, right? Folks like PayPal and Coinbase and others. And that's primarily why we started with those pilot payments in 24, working with you guys, because we actually had a way to say, all right, well, we have the issuance layer covered, right? We know what PYUSD is. That's great. We know who PayPal is. That's excellent. We had relationships on the cloud side. So we had something to make a payment for, right? We had Coinbase custody. And that was like a really easy way where all the pieces sort of fell into place. And then the value prop on the B2B side became very clear. There's also like sort of an added benefit of, using a service like cloud to make a payment for is great. It's kind of like power. So you don't have to think through refund processes too much, right? It's consumptive based. So it's like you use the power, you pay your bill, and that's it. You don't ever call your power company and say, hey, I'd like a refund for this. It's already out the door. And so that, I think, what we tried to do for our strategy was find areas where we had a clear, almost right to win, or a right to be, kind of able to execute. And once we did that, then we could start getting iterative and more exploratory, where we could start thinking, okay, once we have the flow for pay-ins, how could that inform other processes like payouts? How could that inform custody? How could that inform perhaps logic on chain that could bake in a refund flow or provide similar mitigation to fraud chargebacks? And so I think that the biggest mistake that folks generally have made, particularly large companies, that we avoided making, partially by intention, partially by luck, is the crypto efforts that we started in 21 maintained continuity in state until today. So we didn't wind up a team in 21 and say we're going to get into crypto, and then wind the team down after FTX, and then wind the team back up and have like a completely disjointed policy and direction of travel. And I know PayPal's been very consistent as well, and that's something I think our organizations did right. But then in addition to that, we really took a low-hanging fruit, no regrets approach. So we didn't say we're going to try and solve global payments day one. That's very difficult. Much like I think PayPal didn't say, hey, we're going to create like the #1 most ubiquitous stablecoin asset in the world. No, the first step was create a better stablecoin, right? From your perspective, our view was start to build a better payment process, leveraging this new technology and a number of partners, and then kind of iteratively grow from there. And I think that has played out well for a number of reasons. Mostly because I think the challenges that a lot of organizations have is they see the North Star and they just kind of run directly at it. We're going to be a stablecoin company, and that's really hard to do because there's all this infrastructure that has to be built out and education that has to happen. And so that's been our strategy. Our strategy has been to like develop an approach internally, make sure that it maintains state and keep it consistent, and it's level-headed and clear, and resilient to changes in macro market point of view. Find the right partners who have their respective expertise and help you close the delta, right? You guys are far more informed about the issuance process and everything that's going on with PYUSD than we were when we met. Coinbase obviously, owns the key to custody there. And then with those partners and the education, then you can start to find those use cases. And that's kind of what we've done. And I think we'll continue to do that as we think about stablecoins throughout the rest of the business.
I really love how you highlighted that we just have to keep going and be consistent. And I'm sure Steve will agree with me when I say that we've all survived a bunch of crypto winters and waited for the sun to come out, and it has. And we just continue to keep putting our heads down and putting that work in. And we'd be amiss if we didn't mention the big first payment that we did together in 2024, which feels like, oh, it's just one transaction, but that was a really big movement, and that took a lot for like four large institutions to come together to push for this and to realize those B2B flows that could also be improved and optimized with the ability of stablecoins. Um, Steve, I'd love to hear from your perspective also, since we are a large payments machine. What was it like building a business around a stablecoin as the one owning and distributing that stablecoin? And
Sure.
and would love some more examples like the payment that we did in 2024.
Yeah, absolutely. And I would say, our journey has a lot of similarities and overlap with Rich and Google, right? As far as the precepts and foundation that we wanted to build from across the past 5.5 years. And also maintaining the flexibility and agility to one, survive some of the winters. I mean, anybody in this space has their stories of going through the ups and downs, but also the changing regulatory landscape as well. And I think everyone in the space welcomes the clarity that has been really accelerating this year, right? Those of us in the U.S. Are sitting and anticipating the Genius Act. But again, from a global standpoint, right? MiCA, MAS out of Singapore, VARA, et cetera, you're starting to see more and more consistency and clarity from a regulatory standpoint, which, when you're looking at some of those early use cases, and to Rich's point around B2C, we had some of the same beliefs early on. And there's still, right, peer-to-peer is a always been a huge part of PayPal's business, and will continue to be. But when you think of, payments between consumers and businesses to business, that regulatory clarity and the coming to light now is really enabling a lot of acceleration in the development and the planning, to where we went from, hey, remittances have always been some of the lowest of hanging fruit when you're looking at stablecoin payments, and something that we rolled out a little over a year ago with our Zoom remittance platform and funding with PYUSD, but quickly pivoted and said, we will continue to accelerate and build out those retail consumer use cases. But if you look at some of the challenges for large scale B2B flows, it's inarguable, it's inarguable as far as the benefits of stablecoin payments, and being able to collaborate to where large platforms and companies like a PayPal, a Google, a Coinbase, there was another big partner in there from the PayPal side of SAP, collaborating and being able to focus on our core competencies and together how we could deliver, an end-to-end solution, that really takes advantage of, a blockchain stablecoin payment going across. So yeah, it was very exciting. I mean, I still remember very well, right? The rooms that were set up and getting that payment out the door, and watching the scanner and seeing it hit, and that's the first of many, right? The cross border enablement is huge. One of our large international, it's a brand name that everyone would recognize, but I didn't ask them if I could use it here. But I can say they looked across their entire international operations and did some analysis, and they said if they were able to transition all of their B2B payments to stablecoin, it would result in $100 million savings annually. Like, I mean, even for a Google, Rich, $100 million will get a CFO's attention, right? It's straight to the bottom line. And so those are some of the exciting, aspects and prospects. But then when I think about, all right, that's, at the very large enterprise level, and you start to look down, mid-market, SMB, sure, the savings is really exciting, but that acceleration of settlement, right? And you start to compress the cash conversion cycles and freeing up, right, that dead capital that is just lost in transaction and transmission across different payment networks. What can that mean, for your average small business? Maybe they have 10, 15 employees, and being able to, receive, their settlement and their cash flow on average 3 days faster, right? You take a look at being able to open up emerging markets and saying, regardless of where you as a merchant are located, right, you can now transact commerce irrespective of whether that consumer has an internationally enabled debit card or credit card, right? Any self-custody wallet, right, with a crypto address is open game. We're really excited about the potential opportunities that's going to open up over the course of the next 2 to 3 years. And as this regulatory clarity comes about, I think it's not just, payment firms like PayPal or the fintechs. I mean, you can even look at the recent earning calls, right, from Citi and other banks. I mean, these are the things that sometimes are the boring aspects around payments, but this is how, at the end of the day, you really drive innovation at scale and broad adoption.
Yeah, on your point, Steve, about the regulatory clarity, I just got a ping that the Genius Act, or the version of it, cleared the House. Yeah. So apparently Trump's going to sign that into law on Friday, which is amazing, right? And I think that's, like, to your point about, it's like, I feel like I'm on a news station, it's breaking news. But to your point about the clarity, right? And just kind of having clear rules that people can follow, as well as an understanding of the technology. Like, the problem statement is there, right? Like, the value of, or the cost of making payments around the world. Everyone knows it's a massive line item. And so even solving 10% of it, 20% of it, by using some alternative infrastructure yields a significant amount of value for the folks that kind of adopt this early and move quickly. And I think that's one of the areas that's really exciting. Just like everything else in crypto, and you made this point about, like, kind of getting in the war room where we watch that first payment. Like, I think crypto is one of those things where you got to see it to believe it. I kind of go back and like when I first used Uniswap, like people could talk to me about a DEX all day. Um, but when you first like log in and you swap a stablecoin for Ethereum or an altcoin or Bitcoin or whatever, wrap Bitcoin rather, like that was incredible to see that come to life just purely in a decentralized concept. And I think what I saw from all the cross-functional teams who supported the stablecoin payment within Google and kind of working with PayPal was I kind of drummed up the war room thing. I was like, block out 4 hours. We're doing the first ever stablecoin payment. And we were all there, and it was like intentionally anticlimactic because it was like, okay, you guys send it. It was like, it's there.
Yeah.
It was like, that's it. We're all done here. It's like, oh, I blocked out 4 hours, but that's the benefit of it, right? Everyone's expecting it to look and feel like what they see in the traditional payment space, which is if anyone sent a wire, you know exactly what that looks like. They try and send it, maybe they call you, maybe it falls over, then you try it again, then maybe you see it pending, maybe you don't. And that I think is that like proof in the pudding kind of idea around stables is so powerful, and something that I would encourage folks who are exploring this to just do it before they start making developing a point of view.
Yeah, that's actually really helpful, and I think I mean, most developers that are probably watching it, they're old hands at it. However, like for Web 2 community, maybe not so much. And I can't encourage enough, even here at PayPal, right? Some of the most valuable time spent was, hey, just start with $10, right? Go play, right? And that's kind of the fun part of it. You just get everybody probably has their going down the rabbit hole story and moment, but that really is how you can get up to speed the quickest, and really start to like have those light bulb moments as like, oh, I had no idea that I could do this in real time, whether it's a weekend, a night, doesn't matter, right? It's a really fun space to play and work in.
Amazing. I really love that volley of experiences, because it's I like Rich said, the proof is in the pudding, and you need to see it to believe it. And for all the audience members who are new to the stablecoin space, I would definitely recommend that you try it out for yourself, whichever stablecoin it may be, to really realize those benefits and why this is a game changer. And if I was to summarize some of the things that we've said, across the board, I think the four top reasons why I would say that stablecoins are a game changer and how we've highlighted across these examples is, one, how we showed that stablecoins definitely have like an impact and a benefit over traditional channels. When you think about speed and efficiency, and like Steve was saying, right, like whether it's day or night, or whether it's a weekend or a national holiday, stablecoins will still be around for transfer and storage of value, and it's almost instantaneous, which is something that we've never seen before. Lower costs. So depending on which network you're using, there are a lot of intermediaries that are non-existent in the stablecoin channels, which lowers any kind of transaction cost that you may or may not have in other rails. Reliability and stability. I think one of the ways stablecoins became the big powerhouse that they are today is that they bring along all the benefits and all the pros of a cryptocurrency, but with the stability that we and large organizations and large countries need of a currency. And as the name suggests, they are stable coins, but they bring that technological advancement and innovation to all the channels that we use across a broad spectrum of use cases. And then finally, global accessibility. And I think cross-border transactions and remittances are one of the primary use cases that we've seen stablecoins be an absolute game changer for. And that's just the very beginning of how stablecoins are going to improve efficiencies across the board. So with that, and with all these examples that we've discussed, I would love to really I guess not pivot because we're already touching on these things, but shift gears and only focus on some of those real world use cases that we have seen. And to both, this question goes to both of you, Steve and Rich. If you had to talk about, say 2 or 3 top use cases that your organizations are trying to push for or trying to make a move in, from your respective industries and your respective perspectives, what would they be? And how should our audience envision this in the flesh, so that they can see it and believe it?
Yeah, absolutely. I can go first. From specific payments use cases, we mentioned remittances, but I think real world examples are always helpful. So one of our initial partners is a platform in Africa called Yellow Card, and essentially we enabled uh, the remittance from a U.S. customer being funded in PYUSD and being sent to the payee in Africa who had a Yellow Card wallet. Uh, what that meant to that payee was a 30, I forget the exact, like 30 to 40% more value received from end to end than they would have had otherwise. And even for relatively small payments, right? 10, 50, $100, right? You're talking about like real impactful difference in the value that is being enabled across that type of payment flow. We touched on the B2B. Yes, the cross border is huge. You start to take a look at all of the different permutations that enables, right? Whether accounts payable, right? Large enterprise can have tens of thousands of these invoices that they're paying every month. Uh, Being able, right, to not have to schedule a wire a week in advance and fund it 3 days in advance. And, it's one thing, as Rich pointed out, like, hey, did it actually go through? A lot of payments, whether it's enterprise or consumer, and the technology behind it is really taken up when things don't go well, right? And it's all of the disputes, and on the back end, all right, it didn't fund, or we have to track down like where it went. With stablecoin payments, and it's all on the chain, right? It's very easy to track the payments, figure out where it landed, when, uh, and rectify. I think the other piece of it is you start looking at the ability around programmability and automation, right? Whether that's making payments out or receiving payments, and if then, and all of those capabilities is really exciting around the automation front. Um, and then I think the other big piece is you start to look at uh, the ability of addressing payments use cases that just aren't available today, and that gets into the micropayments, right? I think like the coffee example is probably well overused, right? I think everybody knows that, hey, the most expensive part of a cup of coffee is the payment. But you start to take a look at whether it's content creator payments, or things like being able to pay as you go, and the consumption based economy, where all right, now you have a modality that enables a payment of less than $1, right? And being able to send those essentially, like as we get into real time and streaming payments, are really really exciting.
I plus one everything there. I think the two other areas that I was gonna say, Steve took all the good ideas, but I have two more. The one is, and it kind of dovetails nicely with what he said, but one of them is, we spend a lot of time working with the global cap markets institutions, right? These are the exchanges, whether they're commodities or derivatives exchanges, right? Securities exchanges. And it's pretty clear if you look at all the crypto markets, right? These markets are 24/7. They always have been. Whereas the traditional markets have been whatever, 9 to 4:30. And some of that is actually a legacy issue with the markets themselves. Some of it's actually a legacy issue with payments, right? You can't really do clearing and settlement vis-a-vis your customers if the banks close at 4:30. And so we see a really big opportunity around unlocking payments 24/7 there, and stable coins and a lot of the decentralized infrastructure being part of it. Actually, one of the things we announced with the CME is that we built a private blockchain to allow them to move payments back and forth between their end users and themselves 24/7. And so that's a big thing. If you have 24/7 markets, which is where I think things are trending, then you absolutely need to have 24/7 payment rails. Otherwise, you have these really nasty dislocations and overnight risk that, again, I think no one really wants. I think the second thing that is really interesting about this, and I'll keep this short, maybe it's a teaser, but there are some things that stable coins and crypto rails and composable wallet infrastructure are so good at that they give that tech primitive a head start as we think about agentic commerce. In other words, today there are companies, and we're actively exploring this. You're basically giving agents access to a wallet, via MCP technology or something like that, and everything's an API call away. And that's super straightforward. Right now, it's impossible to give your agent access to your banking APIs for a whole host of reasons, some technological, some from the legal side. And that's where I do think that the promise of stablecoin payments gets really, really interesting. Because if you think about agentic commerce, it's sort of a superset of all the things that Steve was talking about, right? And so agentic commerce might involve micropayments. It certainly will involve cross-border. It may involve peer-to-peer or B2C or B2B. And that infrastructure that stablecoins brings to the table will be basically a slip and slide for agentic commerce, in my view, as opposed to what I think everyone in the traditional payment space is doing right now, is trying to wrap their heads around how do they get the gateways involved and everything like that. And so I'm very excited to see how that develops and unfolds. And there's some really great companies doing great work in this space. And so I think everyone stands to benefit from that.
Yeah. I've always seen cryptocurrencies and the boom of AI go hand in hand, and with stable coins and the smart contracts behind them being programmable, it almost feels like it was a partnership meant to be. So really excited to see all the amazing things that we get with agentic commerce, and I know that's something that PayPal is also really excited about. With that, I see that we're almost out of time here, and I'd love to move us on to Q&As that the audience will have for us. Time flies by when you're having fun, and I hope the audience here has been having fun as well. We've covered a lot of ground, from partnership strategies to real world impact, and I hope everyone who's watching and has been following along is starting to see how stablecoins are not just a buzzword anymore, but can really be used as a powerful tool to transform financial services. With that, I'd really love to open it up to questions that the audience might have, and we're excited to talk more about all of this. Oh, seems like we already have our first question. Amazing. Let's get into it. So, Chirag here says that as stablecoins go into market capitalization and integration into the financial system, what are the potential systemic risks they could pose, and how are these being addressed? I love that question. I wanted to ask this myself, but we ran out of time. So, let's see who wants to go first.
I can crack in. Rich alluded to some of it as far as like capital markets. And I think there's a couple things, right? For anyone who's not all that familiar with stablecoins, there's lots of different flavors, right? Algorithmic, it really gets into like what are the reserves that are backing that stablecoin, and pros and cons for lots of different approaches. I think if you look at just from like a capital market systemic risk standpoint, and aside from macroeconomic or political debates, you look at the base base fiat currency that is backing stable coins, where you have instances where there is a one-to-one, right, peg and matching of, all right, the categories and classifications of what those reserve assets are that are backing each and every one of those stablecoin tokens. That provides a level of of systemic stability. I think in the case of PYUSD, very simple. It's cash, it's overnight repos in US Treasuries, right? But I think your point really, like systemic risk, when I start thinking about that, I think about, cross border, and okay, you take a look at the stablecoin market today, it's very, very heavily weighted in US dollars, right? And that's what most stablecoins are backed with today. Depending on where you are, from, a central bank or a government standpoint, might not be all that wild about a bunch of commerce taking place in and out of your borders with USD. And where I think what you will see is you will see, especially in the main trading corridors, the growth and rise of euro-backed stable coins or Japanese yen, and on down the line. Uh, and I think there are a lot of lessons even within legacy capital markets to take the best risk practices, right, and risk mitigation strategies and apply those on chain as well.
I mean, I'll keep it really short. I think Steve hit all the points, and I think this is part of that journey that folks need to take themselves. But in getting an informed point of view about the stable coins and the fact that they are not all created equal, right? And that there's regulatory regimes that provide a lot of these protections, I think is super important. I mean, the one thing I'll say here, this might be too nerdy, but for other folks, I'm a lawyer by trade. And one of the things that we always liked about the structure of the stablecoins we've worked with, including PYUSD, is this concept of bankruptcy remoteness. And so that is, if there is systemic risk, the reserves that back the stablecoin are not subject to a bankruptcy proceeding in the same way that you would be if you were a creditor, or even in the context if an actual bank failed. And so between the 100% reserve requirements, as well as the bankruptcy remoteness principle, in many ways, this idea of narrow banking that's facilitated by stablecoin issuance under the right regulations is in many ways safer than the fractional reserve banking that we have going on. And so it's a really interesting trade-off. I think both systems can play complementary roles, but that's one of the things that we looked at was, is there depth of defense when it comes to the stablecoin structure, the reserves, the regulatory apparatus that sits over top of it. And I think the reduction or the mitigation of risk in those scenarios is really important for stemming kind of those systemic risk scenarios that Chirag, I think it's a good and astute point to ask as these things grow.
Awesome. I hope that answers your question, Chirag. Awesome. We have our next one here. This one's a big one, but it's a really good one. So, what are the most impactful value propositions that PayPal can use to get smaller merchants on board? What sort of external process will be necessary to evangelize PYUSD enough for PayPal to see a meaningful growth from this initiative? In short, what's going to bring the future forward? I love this question, and I'm sure Steve knows exactly what to say.
I do. I'll keep it brief though. Like I could probably spend the entire talk just on this. But in short, right, whether you're SMB, mid-market, or enterprise, right, what's in it for me? What is this incrementally going to, let me achieve that isn't as easy today? I think there are a few things. Opening new markets, right? If you are an SMB merchant, right, expanding your reach, right? I mean, internet has been a great democratizing force. And I think payments, right, needs to catch up, honestly, right? There are still a lot of barriers as far as in those emerging markets. And if you're a merchant, being able to have access, right, from a truly global perspective, regardless of where that consumer resides and whether they have some type of credit card or debit card or not. And yet you still have all of the same protections around, accepting and receiving a payment, just like you're used to today, is really meaningful and can really drive and open up new channels of business. I think, some of the other big areas for an SMB merchant that's important is make it easy for me, right? A lot of SMBs, it can be a sole proprietor, right? They don't have a payments team. So I think part of the value that PayPal can provide is taking that burden off of their hands. They don't have to know anything about crypto, right? I always say that at the end of the day, for stablecoin payments to really gain mass adoption, neither party at the end of the transaction should care whether it's a stablecoin payment or not, right? And shouldn't have to worry about what stablecoin or what protocol was it across. It's something to where when we build the products here at PayPal, we spend a lot of time thinking about the flexibility, right? And if a merchant really wants to get into the weeds of it and they say, hey, I have my own MetaMask wallet and that's where I want my funds settled, that's fantastic. Great, let's enable that. But if you have, a small merchant who they've heard of Bitcoin or maybe not, and they just are interested in saying like, hey, is this a way where I can drive at the end of the day, perhaps drive down that 3% transaction rate, or I can receive my funds right near real time. And maybe there are other bundled rewards or value adds that go with that settlement in a stablecoin. I think those are the things that meeting our merchants where they are and making it as easy as possible for them to where they don't want to touch stablecoins at all. They should still be able to get a lot of those value adds. That's how PayPal drives the adoption.
Amazing. I hope that answers your question, Nicholas. And I see there's a bonus question. Love that. Will new developments in open banking be relevant for stablecoins? Anyone wants to take a gander
I
at
mean,
that?
I'll keep it real quick. And for, I think, yes, I think a lot of times we say like, oh, open banking or, traditional payments, there's lots of real-time payment rails as well, right? Both in the US as well as across in Europe and other uh, regions. I always say stablecoins are a tool, but I think what differentiates them, whether it's open banking or faster payment schemes, is that they're global, right? Almost all of those other payment schemes require, you make that in Europe, sure, you have within the European Economic Area some interoperability, but at the end of the day, being able to, interoperate and take real-time payments, whether it's coming from APAC to the US to LATAM to the Mid East, that's what stablecoins enable, right? It's that true cross-border real-time and payment finality.
Awesome. I think we have one more question. Um, Great. This is from Amanda. So Amanda says the average American doesn't understand most of this, true, and may not be aware that stablecoins exist. So if someone said, "How do stablecoins make payments cheaper?" What's an level 5 explanation for them to understand it?
Yeah, I mean, I am going to give this one a shot. It's a great question, and I think Steve's points about abstracting a lot of this away for the consumer is one that gets lost in the crypto sphere. But I think it's a big goal for a lot of the enterprises. So the way that I would think about it is, imagine that Steve and I are in the same room, and Steve has asked me for $5, and we've all been in this scenario where we reach into our pocket, we take the $5 out of our wallet, and we just give it to the person next to us. There's that physical, kind of we're in the same space and we can just do that. And there is no one who stands in the middle of that transaction because there doesn't need to be one. So I can just hand those $5 directly to Steve. There really isn't a digital corollary to payments in the internet space that kind of maps that physical relationship. So in other words, in the physical space, I just give Steve $5. But if Steve is across the world and he messages me on email and says, hey, Rich, I need $5, the only way to get my $5 to Steve is to basically use this, kind of complex network of intermediaries, payment network providers, wallets, et cetera, to get that money to him. And then there's a whole banking infrastructure underneath of it. And in exchange for them providing that service to me, they're all taking a little bit of a cut. So we've all seen this where I want to pay Steve, he's on the other side of the world, and there's a fee, and it's a big chunk of the payment amount. And so what stablecoins allow you to do is they basically take that physical peer-to-peer transaction that you can do in the, if you're with Steve in the same room, and it allows you to basically replicate that in the digital space. And so Steve and I are chatting on an internet forum, and we're all the way across the world. I can take my stablecoin from a wallet that I have, send it directly to him, and that layer cake of intermediaries and partners who I normally have to pay a fee to help facilitate that do not play a part in that. And there is a very, a small fee in the middle that goes to the networks, but again, that's tenths of a cent in many cases. And so instead of talking about 6% of the fee or 3.5% to the credit cards, you're talking about a tenth of a percent. And so I don't know, Amanda, hopefully that does it for you. I think that's the way that I always try and explain it to my mom, who's asking me like, why do I care about stable coins, and what is she trying to explain what her son does? And that kind of that, physical to digital bridge, I think, is the one that always makes it clearest in my head.
Yeah, and even across the globe, I get my $5 from Rich right away.
Exactly. Which makes sense, since so much of our interactions now are moving from that physical same space dynamic to one where we're engaging in global commerce on an almost daily basis, right? If you think about all the things that you're buying from Amazon, or if you buy from a seller, etc. So
no, that's perfect, and we'll keep it at the Eli 5 level. But again, like a lot of my time and my days are having that discussion and then a level up, and we get into like, hey, at the end of the day, payments and financial services are really based and built around risk mitigation, right? And that's where you start to get like a lot of the inefficiencies. And the great thing about stable coins and on-chain payments is that it's visible, right? It's very easy to track and to see where the funds are, where they went, all throughout the transaction. So you're able to cut out, quite frankly, a lot of those intermediaries that are in the middle extracting fees.
Awesome. Thank you so much both for those responses. I think we have time for one last one. I'm going to squeeze one in. We have a question from someone on our X live stream. The question is, how close might we be to seeing mainstream stablecoin adoption?
How close? That's man. If I had the exact answer, I don't know that I'd be I'd be on an island somewhere. But no, all kidding aside, I think one, it depends on how you define like mainstream adoption. I think if you take a look at the trajectory of just stablecoin market and where it's being used today, right? The payments use cases is still we're very early, right? You take a look, I think it's like over 30 trillion in stablecoin volume today. Lots of different numbers, maybe, right? Single digits, low single digits of that are for payments use cases. As we mentioned, we get greater regulatory clarity. We get innovation and adoption driven by a lot of the brands and platforms that consumers and businesses are already using today, right? And start to build that collaboration between their existing products, new and exciting products that will bring like, new value props into the market from a developer community. That helps accelerate that adoption. We started this journey saying, 5.5 years ago, this is a 10-year journey. I still feel pretty comfortable with that. We're about midway, right? But really excited about where we're headed.
Amazing. With that, we're on time. Steve, Rich, this has been an absolute pleasure. Thank you so much for painting such a vivid picture of where stablecoins are today and what our future looks like. For everyone tuning in, thank you so much for making the time. And I hope you found this as fun as we did. And please do stay in touch and stay along the journey to watch the next session of the PayPal Summer Club series. And we'll see you in about 2 weeks. Thank you all.
Thank you.
Thanks, Mac.